Hi friends, this is Bank Nifty 5 minutes spot chart on 11th October 2022. In this video, we will try to find the strength of major player versus minor player and the strength of same player at the same level. If it is consistent, how are they going to take the market down or high? We will see in this video. So let us start our analysis from this high. Sellers from this high are very strong because they are able to create a huge gap down. However, buyers in this zone are equally strong because they're able to make the market up despite having this so much of gap down in one single swing. To identify such swings, all we have to do is to draw right pitchfork in the right areas like this one, and you can see that the price is almost touching the upper end of this pitchfork. So we assume that buyers are of good strength in this zone and sellers in this zone. However, since yesterday, market is showcasing lower lows and lower highs kind of platform in this arena. That is happening exactly after the market has touched above this high. So which means this flow is an induced flow, and the market has natural correction to counter that induced flow towards upwards in selling motion. Now if market is going sideways, see, until this time market, most people predicted that market is going to be sideways until this low. Okay, so there are sellers dominant in this zone and buyers dominant in this zone, and especially if we speak this zone, this particular low has been manipulated. That flow has created a solid structure breaking this low, but immediately after that the market crashed and then has again poked this high. Okay, so there is indeed a good level of manipulation that has happened between this low and this high. So these two are going to be very crucial for our analysis. Now, we certainly can assume that if buyers come again from this zone to, sellers bring the market from this zone to this zone, those buyers who have created this high will may appear again and pull the market up. That is one scenario. Or if sellers are strong enough in this zone, they should be able to pull the market down. So buyers from this zone or sellers from this zone, who are going to win is what we are going to see in this video. How do we analyze that? Now, uh, since market has touched this high and then created an inside candle, so market may further go up, but let us examine if this can be a major market reversal with the help of pitchforks first. So if I draw a pitchfork between the latest highs and lows, we can see that price is being drifted here and then catching again at the top. So if we shift the frequency to the latest low, you can see the price is respecting the inward line of this pitchfork beautifully. Also, if I draw a same pitchfork with an extended C pivot instead of this pivot to this pivot, let me indicate this new pitchfork in black color. The same pitchfork is again being respected at exact same level, where this is high is manipulated and then created an inside candle. Also, in terms of momentum analysis, price is creating a higher high in this zone or lower high from this to this high to this high. Okay, let me indicate that in green color. So price is creating lower highs in the manipulated level. At the same time, in terms of RSI, relative strength index, price is creating a higher high. So this shows that this high that is manipulated just now is indeed a market edge. We try to play our games at the market edges so that we will have minimum risk and maximum reward. So we assume that sellers in this zone are too strong enough, and if they are strong enough, they should be able to bring the market down at least to the level of this inward frequency or supply demand zone at this level, and then see how further action may take up. So to do that, all we have to do is to draw a pitchfork between the areas of interest. and then see how market goes. So we are going short here with a stop loss above this high and a dynamic target along this midline of this pitchfork. So let us see how price unfolds further. So price has respected this midline of pitchfork beautifully and then has created a bounce back. So this bounce back is created by those buyers in this demand zone who have created this low and now again appearing. So the question is, who are going to win now? The buyers from this zone or this demand zone or the sellers from this supply zone? Who are going to win is the big question now. So to do that, we have to wait and wait for other edges of the market to coincide. Now, since this is going to be a major flow because it's a third time price came here and then bounced back. Look at the price flow from the supply zone. First time the price came down heavily with 1, 2, 3, 4, 5, 6, 7 candles down. Second time with just few candles, and third time again the same volatility. So we can assume that sellers in this zone are indeed stronger, so stronger that they are not allowing price to take above this high. If that is the case, then they should not have any problem in breaking this normal demand zone and then pull the market down to as low as this inward frequency of this major supply zone. Because this is a zone where the birthplace of major bias is, and if sellers are strong enough, they should have no challenge in breaking down this demand zone and coming down to this bottom. So we can also draw another pitchfork with the major adjustments because this is going to be a major flow. We can draw another pitchfork and let me indicate that pitchfork in say uh, blue color and the other pitchfork in black color. So we'll see how price behaves when price reaches this zone and then we'll act accordingly. So for simplicity, I just kept only one pitchfork from the major market edges because we have measured our relative strength index from this level and assumed that this high is going to be a market edge. So we have drawn pitchfork between these highs, and if price touches this low, probably we have another opportunity to go short and to reach this bottom edge of this midline of this pitchfork or the inward frequency of this major birthplace of buyers. So let us see how price unfolds. So buyers from this zone are showing their resistance at this level. Price not going down, so they are resisting price to go down. Whereas the sellers at the same time are not allowing price to go beyond this high. So let us see how price unfolds further. So suddenly we see a big volatile candle, bullish candle in just 2 bars like this. So many retail breakout traders who want to go long because of this solid support zone in this demand zone from this demand level might be tempted to go long immediately after this bullish candle breaking the high of this minor flow. But that is how exactly we are induced to assume like from the major market players. So this is what is called von Restorff effect. That means creating incidents or candles in chart that will make retail traders believe that market is going to go in one direction, whereas they take exact opposite direction and pull the market down. So if you are keen enough, this is the point you have to go short, not go long. Let us see what happens in the very next candle. The very next candle is a fractal candle and it is steadily pointing towards downside. Now we have this major pitchfork. The price has not respecting this midline of this pitchfork. Now if we adjust this pitchfork to the latest frequency here, we see that price is catching the outline of this pitchfork beautifully in this level. So if you are going to observe market in the way not like retail traders, or if you want to put your shoes in the you know, hands put your legs in the shoes of major market players. So this is the point you have to go short, considering this as a market edge. Now let us see how price unfolds further. So price indeed has broken our major pitchfork, the shifted pitchfork to the latest frequency, has touched this major supply zone, and now the price is in its small reversal phase. Because no matter how big the row is, the bias from the major solid structure will still have some sort of support. That means resistance for price to go down, and then we can expect a small bump up from here, and then see how price unfolds further. So this is how you have to analyze price, guys. If you are interested to know about these advanced techniques of market manipulation, of identifying the market edges, we use advanced price action strategies, and we can teach you the same if you are interested. Please ping me in person if you are looking for such advanced training courses. Thank you. So let us see another video.